Welcome to this week's version of Nickels and Dimes, our weekly video series. Today, I wanted to talk about 3 ways to hedge or protect your portfolio. Obviously, we've had a great run since the March of 2020, where I think it was March 23rd, the equity markets hit a bottom, and we've seen tremendous upside since. So obviously, not every rally is going to last to infinity. We're going to have a pullback or a downturn. Now, in an ideal situation, you protect your capital, from that downturn. So again, 3 ways to hedge your portfolio. The first way is traditional asset allocation. Now, there was a study done a long time ago that identified that 90% of a portfolio's total return was determined primarily because of its asset allocation. So, in other words, the types of investments, the types of asset classes that you're diversified in. So, traditionally, most folks own stocks, whether that's be individual stocks, equities, whether it's individual stocks or through mutual funds or ETFs, and also some folks own bonds. There are other investments like real estate you can invest in. Other folks consider annuities. So whatever your flavor of asset allocation, that's one way to hedge your bet. Another way to hedge your bet or to protect your portfolio is something called put options. Now, put options are basically contracts that you could buy that will hedge. In other words, they'll actually appreciate if the underlying investment, whether that's an individual security or an indice, declines in value. So again, something called put options that also will potentially protect your portfolio. The third way to protect your portfolio is shorting stocks. Now, this is starting to get a little complicated. Basically, shorting stocks, you're betting that the price of the stock is going to go down. And when you're shorting a stock, you're actually borrowing shares. It's a little complicated, but to the extent your advisor or broker approves that, it's something that you can do. So again, with shorting stocks, you're basically making money if the underlying security declines in value. So whether it's traditional asset allocation, which is the first thing I mentioned, or buying put options, or shorting stocks, or a combination of each, my message to you today is you should definitely have a plan or a strategy to protect your portfolio. Now, I suggest that, or we suggest that in all types of market environments, because no one knows what the future holds, and it's very difficult, of course, the top of the market and, of course, the bottom of the market. But I will say that I do think it's prudent, if you do not have a protection plan in place, whether it's traditional asset allocation or using a few other pretty complex strategies, I suggest you do so, especially if you are retired. Your number one goal should be to preserve your capital, again, because you don't have time to make up for big losses. So to that end, if you would like a second opinion on your portfolio to determine if it makes sense and to what extent it makes sense to protect your portfolio, you're welcome to send us an email, cnichols@nicholswealth.com, or you can go on our website at nicholswealth.com to learn more. Thank you again for watching. Have a great day. Bye-bye.